Hey guys, this is the post analysis for Euro Dollar. And for those who have went for the webinar yesterday, you saw that I took some trades on EU, right? So I think I got involved here, and I got involved here yesterday after webinar, if I'm not wrong. And here's how we get the entire trade idea. So first of all, ask yourself this question: where are we in the market? Okay, where is my point of invalidation? Where is my liquidity lows? So right off the bat, on the 4 hours or on the 8 hours, I have this break of structure here. Coming from this level, right? We have this break creating a high, and at this point of time, I know that okay, my sell side liquidity is over here at this wick. This is my protected high, my strong high, pivot high. And then what's next? High time frame H8. My second time frame would be 30M, right? My 30 minutes supply zone. So from here you work upside, 30 minutes, 1 hour, and at this moment of time, my supply was at this level. Okay, and prices started to shift over here. So I went to look for the higher time frame and realized that okay, we're actually tapping onto a 2 hours supply zone. So for those who have been waiting for this supply to get tapped, you are just going to wait for prices to fail to create lower lows. Then you will see a move up towards this level. Otherwise, work with what you have. You understand that the entire buy to sell comes from this level. You are able to look for the shifts here to take you towards the downside already. So prices does not necessarily want to mitigate deeper to go lower. So now with a 2 hours supply and with a H8 as our high time frame, I'm looking for at least the 30 minutes break of structure. And if you wanted to, you can go down to maybe the 8 minutes or the 15 to look for the white cloth or rising wedge or whatsoever. Okay. So over here you can see I have my 30 minutes break of structure, and in this case it became a 1 hour. Doesn't matter. Break of structure happens here, or rather I would say, yeah, this is the high. Can you see? We track this high, low, high. So this becomes your minor high, minor low, sorry. Okay, so we see a break of structure over here, leaving behind a 15 minutes supply. So my confirmation schematic was this level. The breakdown confirms my area. And all I did was place a sell limit here, stop loss above this level. So now, can you see this is the next framework we are doing? Because we frame the entire area over here. So we're looking for a 30 minutes shift, which happened with this breakdown. Then supply zone sell limit here. Stop loss above, target for this liquidity lows. So I was aiming for this for my first target. And when this was happening, you realize, okay, we broke the H1 structure. And this means that we have a new range to work with. My impulse becomes this level. Okay, break structure, looking for valid buy to sell zones, and this is the same supply zone that we're going to use. H1 BOS 15M supply means what? We are going down to the lower time frame. Okay, now you realize this supply now is our step 2 with this framework. This supply was our entry with this framework, so it's different. Okay, so now our step 2 is locate S and D, and of course step 3 is look for the lower time frame. So I was looking for a 5-minute shift, and you can see clearly this was a 5-minute shift. Yeah, here was the BOS, the low, the high, the BOS, leaving behind a supply zone inside of here. So yes, you can use the entire wick over here. I use the one inside of here. And for those who are trading my call, of course, you can look for this price action over here on the 1 minute, and you realize this is Wyckoff, buying climax, automatic rally, ST, signs of weakness, UT, UTAG, shift, break of structure, leaving behind the last buy to sell. So this is where I get involved. My 5 minutes broke structure, and my 1 minute gave me a confirmation in terms of distribution schematic. Down here, stop loss above here. And I was able to take partials at my immediate leg. Can you see? When these prices break down, tap in, my immediate range is this level. TP1, TP2, and of course TP3 will be all the way below over here. So you realize that over here you get involved first. Okay, if you are a trader, maybe you are trader A, you got involved at this level first with stop loss above this high. And you realize that even if you get into the market first, you may not get the run towards the liquidity lows. And instead, this I took a loss because I didn't even hit TP1. And why didn't I hit TP1? Because if I were to trade this entire area, my TP1 should be this level. So can you see when I trade this leg, my TP1 is here, and that is how I actually gain some profits over here. I think this was 1:2.5 already. And then I took 50%, allowing the rest to run towards this level for another 30%, then the 20% running towards this liquidity lows. didn't happen, doesn't matter. So can you see that just based off taking 50% of my first TP over here, I already cancelled off the loss that I took over here. So this is how you manage your trades. And then ultimately when prices fail to make lower low and breaks deeper, I want to see why do prices want to go higher? And inside of this was a 5 minutes supply inside bar. Can you see this 5 minutes inside bar? So prices came back down, break H1, move into this 5 minutes supply. And now H1 is your higher time frame, your step number 1. Step 2, S&D on the 5 minutes. And of course, now with the H1, I'm looking for at least a 5M shift. It happened here. Can you see? This break was the sign that tells me it wants to go lower. And you can see this sell move is impulse. Then I go to the 1 minute and you realize that you can also see another schematic. Here. So this is another Y-curve distribution. Buying climax, automatic rally, ST, signs of weakness, UT, shift. Leaving behind the last buy to sell here. And for aggressive traders, you could have placed a stop loss above this supply. I don't do that. I wait for a stop loss above this level, of course. And then this is where I made a run towards this liquidity lows here. Okay, so TP1 at this level. This is 1:1.3. So 1:1.3, I took out around 30% because this isn't huge enough. And then I let another 50% run towards this level. And then now, going to target this. So can you see that the range between this level, these two, is near. And that's why it doesn't make sense for me to partial 10% here and 10% here. So I took more. I was more aggressive in my take profit at these areas and this area, and just ignore this and target the ultimate liquidity for my remaining 20%. So now prices actually grab liquidity here, break of structure, came back up towards the last buy to sell here. So if you're looking to take an entry right off the bat over here, then you have to think of where is your stop loss. Okay, above here, last point of mitigation, and target liquidity lows here. So if you just got involved, of course this will be your target. For me, I already got involved here, and that is why I'm not too particular about taking profits over here. And this should be your TP1 for sure. And this is your TP2. So next up, we have the Aussie CHF. You realize that we have a 8 hours break of structure over here. So highs, lows. So we are trying to catch the pullback. So H8 BOS, we are going down to the 30 minutes to look for S&D zones. And in this case, we have several areas. We have 2 areas. One over here and another one below here. So you can see this is a 30-minute supply. I think I used the 1 hour. So this entire buy to sell is valid for sells. So when prices comes back up, we are working with the 8 hours break of structure. I'm looking for a 30-minute shift at the least. So you can see the 30-minute structure break is over here. So now if you're a Wyckoff trader, of course, go down to the lower time frame, look for this. This is your schematic. This is your upthrust. This is your U-tap. This is your break of structure. So now this is my Wyckoff. This entire framework over here is my Wyckoff. So it's building the course, right? Your stopping action, your building of the course, your breakdown. So wick into strong hands transfer. So aggressive traders who caught the shift over here may have gotten caught on the wrong side of the market because this may be a wick out. Depends on how you manage your stop loss. Otherwise, you can wait for this clear breakdown and catch the shift here. So for me, I place a sell limit at the 3 minutes. This buy to sell. And then got tapped into. So stop loss above this high. If you're aggressive, you can place a stop loss above this high. But you realize that all of these are POIs for you to work with as well. So you may get stopped out before moving low. So this is how I get involved. Of course, managing my profits. TP1 here, TP2 I think over here, and TP3 over here. So you can see, if you are using a 30 minutes as your higher time frame, so I'm pretty sure we went through this. This is your 30 minutes low. And this is your break of structure. So at this time, you are potentially trading the 30 minutes time frame. Okay, if you are looking to trade this framework inside of this entire framework, then this becomes your step 1. So now step 1 is your 30 minutes break of structure. So let me just label this 30 minutes break of structure. And then with a 30 minutes break of structure, you are going down to the 5 minutes, 2 minutes, 3 minutes to look for S&D zones. So in this case, again, you have this movement over here. This is your step 2. So you realize we are actually using this as our step 3 with the entire framework created over here on the 8 hours POS. But now this new range that was created over here, this becomes our S&D zone. So this is not an entry just yet. And that is why you need another step, which is the confirmation. So typically you want to go down to the seconds time frame. Otherwise, work with 1 minute. Where is your Wyckoff? Here. And then there is nothing over here until we break structure at this level. So typically you're going to wait for a pullback into this to go lower. So in fact, I was waiting for it. Didn't happen. Prices continue to go lower. Distribution over here, you can see, you can call it, triangle pattern or whatsoever. It's the same thing, right? Distribution going down lower. Prices came back up into this level to go lower. So this is how we actually caught the runner into liquidity lows over here. So yes, do you always see such a run towards high time frame liquidity? You don't always see them, but you realize that based on how we manage our trade, based on how we actually use the fractal market movements to actually gain profits, prices doesn't need to hit the high time frame liquidity lows for you to earn a lot of money. Okay, we got involved here. Let's say prices decides to tap from this area to go higher. You are already banking in 1:3.8 already, right? Whether or not this moves higher, it doesn't matter because you partial 50 here, you partial 30 over here, and 20 over here.